Thank you. Our next panel presentation is focused on multi-state operators, where we'll be discussing the current state of the industry as well as the future. Today, I have two great companies with me, Gary Santo from Tilt Holdings and Paul Wimer from Greenrose Acquisition Corp. With that, I'd like each panelist here to discuss the company, introduce themselves as well. So I'll kick it off with you, Gary. Go ahead.
Sure. So my name's Gary Santo. I'm the CEO for Tilt Holdings Company. We are a multi-state operator that actually is one of the few B2B multi-state operators, truly vertically integrated in that we have both plant touching and non-plant touching operations. So about half of our revenue comes from our inhalation and accessories department. So that would be vaporization hardware, so the power packs, the empty carts, the packaging that goes along with it, but then also packaging that could be used in the other half of our business, which is plant touching. And there we provide innovation solutions in the 3 states that we're operational in now, Massachusetts, Ohio, and Pennsylvania. So for us, it's not about building our own brands as much as it's about supporting existing brands out there, existing MSOs and LPs with solutions, with hardware, with plant material, and with products to try to help them expand their reach in the various states they're operating in.
Paul?
Yeah, so Greenrose is a NASDAQ-listed SPAC. We announced our business combination transactions about a month and a half ago. And those will put us as a vertically integrated operator in 7 states with particular focus on vertical integration in Oregon, Nevada, Colorado, and California, with cultivation forward focus in Connecticut and Arizona. Our intention is to become a vertically integrated multi-state operator with leading with cultivation, because we believe having the best quality product allows you to manage your business most effectively through vertically integrated operations, with expansion beyond that.
Great. Well, I know there's a lot of talk about regulation today and different acts that the government needs to take to help move the industry forward. You know, we've got a bunch of states now here, 5 recently, that have adopted recreational use, and likely more to come here in the next round. So, you know, with that as kind of the backdrop, you know, maybe Gary, for you first, and then I'll ask Paul to chime in here. When you think about like the Safe Banking Act and being able to move funds more quickly, get lending, et cetera, how are you working and navigating those issues? And really would like to see, from your point of view, what do we need to be talking to our local Congress people about?
Yeah, I think safe banking is the easiest one of all, and the one that's probably the cleanest. My concern whenever we talk about regulatory uptake and all the different bills that are floating around is each of these bills gets substantially larger the more people think about it, and they start adding in a bunch of different other pieces and components to it. And the bigger the bill gets, the easier it is to find somebody who's going to be against it. But it's hard to argue the need for safe banking. The fact that consumers struggle to use the tools that they normally purchase with, right? They like to use their credit cards. No one really carries cash anymore. So whether it's the end consumer or whether it's us even selling to other businesses, we regularly collect cash here in our headquarters in Arizona when people come to pick up the hardware. It's just not a typical structure. It creates high operating risk for us to have that much cash, going about the organization. You have to move that cash. You have to find places to put it. And then the banks you can choose to work with are also limited. Even something as simple as getting a DACA account. So this way, if you want to have a line of credit, you can have a sweep mechanism built in there. It's difficult to find that if you touch the plant. Now, our Jupiter division, that's our inhalation and accessories, that's not plant touching. We've had much more of a normalized experience with banking there. But oftentimes they'll see that the larger company, Tilt, does touch the plant, and it just slows everything right down. So it just makes it very clunky. It's not impossible to navigate. I think things have gotten a little bit easier now than maybe they were a year to 2 years ago. But I'm really more concerned about the end consumer and their ability to destigmatize what it means to purchase cannabis and cannabis products. The more that they have to do to come out of pocket and do cash and not have a normalized buying experience, I think that the harder it is for them. And then, of course, not having an ability to collect that cash in a normalized way makes it hard for us too.
Sure. Paul, I'd like to have you comment as well and talk about the acquisition side and getting funding, et cetera.
Yeah, it's the absence of normalized banking hinders this industry in its growth. It's a business and an industry that's in its nascent stages with plenty of opportunity for expansion. But like most industries, I've spent most of my career with early stage companies, and early stage companies need dollars to be able to fund growth. And the way that this industry has typically funded growth has either been to reach into their own pocket, get triple mortgages on the houses that they own. But as soon as folks understand that you're in the cannabis industry, many of those sources dry up. And you've seen the expansion of the cannabis REIT, where sale leaseback has become commonplace, because that's one place that cannabis companies, if they own their own real estate, can find capital. As was mentioned, access to capital is important also for consumers and their ability to use just traditional forms of credit, to use their credit card instead of debit card. And I agree, we've become a digital country, but now we've gone analog by asking people to reach in and find the dollar bills in their pocket that many people don't carry any longer. It also creates a lot of issues for multi-state operators. There are banks that do help facilitate the movement of cash from dispensaries or from your operation to your bank account or to a vault. The stories of folks, transporting significant amounts of cash do exist. I mean, businesses that are generating $50,000 to $60,000 a day, their vaults on site aren't big enough. So there are intricate processes in place for armored car services to move cash around, which creates a risk for cannabis businesses. And it creates a spin-off opportunities for security in businesses like that. But as we see, as a multi-state operator, being able to function and operate, having easier access to cash would be helpful. Certainly for us, being a SPAC today, that's one way we were able to tap public funds through a public entity. But then, moving forward, how do you manage that? How do you manage the flow of funds so that you can move capital easily between states to fund different operations? Is all part of how we think about the business we need to be in the future.
Yeah, I would even add on top of that, just the sheer cost. So if you have a lot of these startup companies, the cost you pay for those armored car services, even the banks that help out, their monthly fees are much higher than typical banking fees. That's all coming right off your top line margins. So, you're having a hard enough time trying to get to scale, and now you're having to lay out this additional capital on top of that. So it's not efficient. From a margin perspective, it's definitely not efficient from an operational perspective, and it does limit you. I mean, this might be the only industry where doing a sale leaseback is considered to be like, you're from the future. Every other industry I've ever worked in, sale leaseback was the last place you went when you were having trouble with every other line of credit. So it's funny. It's the first place a lot of folks had to go because there weren't a lot of options. So it's starting to get a little bit better. I think the institutions are looking a little bit stronger, but as long as those federal rules are out there, there's still going to be limits on how far even they can go.
Sure. That's a great overview. Both, thank you very much. With that as kind of the next step, and as people look to, as we think about everybody kind of looking at their balance sheets, taking into account the cash and the capital structure they have, obviously brings up the question that, maybe I'll start with you, Paul. As you think about acquisitions, I know you said you're starting more from the cultivation side. But what other, and you've mentioned some states that not a lot of people, I think, mentioned, like Oregon, et cetera. Everybody tends to think California, but, I definitely, they see the West Coast coastline, Oregon is just north of California the last time I looked. So you're not very far off. But when you're looking at acquisitions specifically, does it have to have cultivation, or would you look to acquire maybe, let's say, as you think about Oregon, maybe a Winberry Farms in the oil business per se as an asset? I'm just throwing that out there as an idea, not as a banking idea, just as an example.
But I've spent my career working across a number of different industries. So what we look for first and foremost in companies we're looking to acquire are a great management team with a great track record, but more importantly, who want to be part of something bigger. This is an industry that, because it's in its early stages, there are a lot of mavericks who've seen their ability to grow a business and their desire to do that really under their own control. And for us, that has been something we've talked to a number that are great businessmen, or businesswomen, but they want to run their own business, don't want to necessarily have some other entity that's attached to them that'll make decisions around capital allocation or around how the capital might get used in the business. So, but you do pose a good question. This is also another industry that to be able to best manage your margins, being vertically integrated makes sense. There are certain states that don't allow vertical integration, and certainly with some of the new legislation that's coming through in states like New York or others, where incumbents are getting a nod towards potential growth in the future with new licenses being limited to either being a dispensary or a grow, but not both. Vertical integration is important. This is an interesting industry in that with the development and evolution of most industries, vertical integration usually doesn't work because it costs too much money. It requires too much expertise to make it effective in the long run. That's why companies on the consumer goods space like Kraft, if you look at what they're really doing today, they're a marketing engine and an R&D engine. All the manufacturing work is done by other companies. So it used to be they owned all their own factories. They don't today. Someday, cannabis may end up there. Things like if federal legalization happens and interstate commerce becomes important, we believe we'll be well positioned because cultivation indoors of high-end, high-quality flower will be critical. Low-end, outdoor-grown flower that's being put directly to oil, that'll be like the CBD marketplace that today has been in a free fall because anyone can grow it. What are the actual provenance of the product and what differentiates CBD, CBG, CBN? Where does it come from? For us, being able to manage our marketplace, to be able to grow high-end flower and manage the cost will deliver us a manageable margin that we'll be able to make if there's interstate commerce or not. And we've also been purposeful in thinking about our expansion strategy to think about Connecticut being a base to be able to connect to Massachusetts, Rhode Island, New York, Pennsylvania. Same thing with Southwest, where we're focused with Arizona, California, Nevada, and then Colorado and Oregon, working our way up the West Coast so that we can have locations that are proximate to large markets that'll be able to still capitalize on indoor high quality grow, which you can't accomplish outdoors. I think in all the companies we've looked at in the spaces across the United States, there are very few microclimates that allow you to grow high quality flower outdoors because there are just too many variables you can't manage to. So part of the strategy is making sure that we've got quality cultivation where our costs are manageable, yields are what we can expect, and we can manage the strains that are being produced versus being at the whim of whoever the other wholesale cultivation operations are and whether we can take advantage of those or not.
Gary, I would love to get your perspective, as you look at the plant touching as well as the inhalation business, they do kind of cross intersect each other. And yet you also work with other MSO providers in constrained markets on the East Coast, specifically as Paul was talking towards. Would love to get your perspective as you think about expanding and possibly looking at M&A from your point of view. Does it have to be either, or are you looking more on the product innovation side, or would you be looking more on the plant side, or just opportunity as it comes out?
I think for us, because we can look at both sides of the business, wherever we can own more of the specialized supply chain, I think Paul nailed it. If to own as much as you can is the best way to go. Now that said, in a fully legalized market, I could see a place where, as he mentioned, the high yielding standard grow plants that'll become commoditized. The big agro guys will come in. I also think retail over time starts to become commoditized. People like to buy things online. I see big box stores stepping in. There'll always be a place for sort of your local wine merchant, if you will, but those big box stores have a way of creeping into everywhere. So for us, we've tried to focus on that middle space, the specialty grow, where maybe the MSOs don't really sell enough of a certain type of a strain to justify dedicating their limited footprint to growing that strain. But if we can distribute to multiple MSOs, then suddenly that makes sense for us to do it. So we like that B2B play. So for us, we'd be looking at cultivation, we'd be looking at manufacturing. We think that CPG is going to play a really big role in this industry over time. Brands will come. There are brands in California that have withstood this test of time, and even though that's a race to the bottom market, they're still commanding a spot in the market. Either they've held their share, they are commanding a premium price, they're well respected and known. And I think working with those brands to bring them to the East as that starts to promulgate will be key to us. Now, do we limit ourselves to plant touching? Not necessarily. I mean, we're in Pennsylvania, Massachusetts, and Ohio. Gives us a pretty good nexus that in a fully legalized market, we can touch pretty much half the U.S. Now, if we could add a couple more states in that area, I love to mention the Connecticut and those type of surrounding states. That Northeast corridor, you can reach a lot of the U.S. from there. I think so that'd be one place. But, I think, Robert, you're right to point out that we don't have to limit ourselves just to innovation and plants and strain. We can look to our hardware provider. Now, packaging is a pretty big thing, not just for the vape cartridges themselves or for the power supplies, but for all plant touching. People are really starting to look more and more into the packaging, are using glass jars, plastic jars, the regulatory overhang that's, in each of the states where even in our 3 states, how we sell our flower, the type of bags or things we have to put it in, it can vary. So there's a very fertile ground there, I think, to focus on specialized packaging and packaging that really takes into account the production line. You don't want to have packaging that creates extra work for your people. You want to have it that flows through the whole process. So looking more into the ability to provide those types of services to folks. And then, of course, on the innovation side, I think now our former CEO, Mark Scatterday, he's back in the lab, and he's focusing full time now on looking at the next great innovation. And you might remember that he was instrumental in working with the Chinese provider S'more in bringing their C-cell ceramic technology from the tobacco industry into higher viscosity cannabis vapes. He had a broader vision for where we could go with those things, and it sort of stalled out when he became the CEO of the larger publicly traded company. But our intention is to get back into the trenches and start looking at innovation and really start to look past just straight concentrates. I mean, you're seeing more and more of a migration away from the pure concentrates where you have the flavors and things like that. People are trying to get back into the more, higher fidelity brands of vaping. If you look at the live resin, for example, right, it's the taste, the terpenes, and the things you can experience from that maybe you don't get from a typical concentrate. I think as we move towards that, as we look more at innovative ways to do heat not burn, as we look at ways to be more ecologically friendly with cartridges and things like that, I think those are all fertile ground for us, whether it's on the M&A or just putting our own dollars towards our own innovation labs, where we'd start to look to expand further.
Great. One thing that keeps coming up, and you guys touched on it a little bit, when do we get federal legalization? And I know that's hard to predict, but one thing that came up today that was interesting as I was talking to one investor, he said, well, what happens when we do get federal legalization? Right now, I think Oregon is the only state that actually has some regulation in place to do export, but obviously nobody allows import. So that's a non-starter, but glad they're thinking that way. Kate Brown is on the forefront of that. But more importantly, I think, do we see a federal tax that comes along with it? Are they going to impinge on the states where instead of, let's say, in Oregon taking 17% at the state level, 3% at the city level, does the Fed step in and say, just like cigarettes, gasoline, we're going to put a federal excise tax on this for 5%? Do you think that's likely?
Yeah, so think about a couple things. Right now, the federal government benefits from 280E, where if you're a dispensary today, none of your costs that are associated with sales and marketing of the product are deductible. So it means that today, the federal government is benefiting from every cannabis business that is dispensary oriented, who has to pay higher taxes. So that one there's a balancing act that has to come in somewhere to counterbalance that. The other aspect of federal legalization beyond taxation is while the states are scurrying to figure out how to fill tax coffers drained by COVID, or just figuring out how to manage the budgets that are expanding over time, cannabis is a great place. I mean, I've lived in Colorado since 2009 and have watched Colorado benefit from a booming cannabis industry that'll, and you look at Oregon, and, those are places where the regulatory cycle has gone through its ups and downs, but the states have figured out what to do with the business, what to do with their tax proceeds. And there will be a battle. As soon as there's federal legalization, now you got a lot more regulating entities that are going to have to come in and deal with it, whether it's the FDA, that'll help to regulate kitchens and manufacturing. I mean, I've wandered through a lot that, having seen pharmaceutical plants that I've seen as a consultant, most of the folks that I've seen don't measure up. And there'll be a lot of businesses that won't be operating because of federal regulation and the FDA closing them down because they can't replicate what they're doing. So there are going to be many more aspects to regulation. Interstate commerce is another one that may come some point in the future. It'll probably start at the lower end of the food chain around distillates. But how the states battle for those tax dollars will be something that's on the horizon and something that shouldn't be underestimated. I think 280E, people are excited by federal legalization because 280E will go away, but it'll be replaced by something else. Because, someone will have to figure out that balance.
Sure.
Yeah, I think that's exactly right. I mean, throughout the pandemic, this is one of the few industries that was continuing to grow and add to the tax rolls. So I don't think anybody wants to give that up anytime soon, or even just the employment locally. And you hear rumblings that some states are saying, if you're going to sell here, you better grow and manufacture here. So it's really going to depend how that food fight plays out over the long haul. And, I think, referencing my prior stop before coming to cannabis with life sciences. And, as I think about a legalized world, couldn't agree more. Be careful what you wish for, because the manufacturing processes, the testing regimes, even just being a publicly traded company and trading on NYSE or the NASDAQ, now you have to deal with Sarbanes-Oxley. These are all things that a lot of these companies came to market via a SPAC or a reverse takeover, where you didn't have to go through that mental discipline that when you go IPO and you have to have all the audited books and you have to have all your procedures and everything documented, you have to withstand the bright light of going in front of all these investors and find out where the true value is, as opposed to going through the valuation exercises where it looks more like a financing, if you will, than a true equity deal. Those are all things that these companies have never gone through. And to now suddenly be thrown into that over time, it'll take a bit. It'll take a bit for it to work its way through. I don't think it'll be the panacea out of the gates. It'll probably come incrementally. Wouldn't surprise me if you started with banking and then maybe aspects of the MORE Act comes in. Social equity is going to have to play a role there. How that's going to then filter in. So there's so many different things coming around trying to press on this cannabis wave that, if there's nothing else for everyone to worry about, we could start thinking about that too. But I still think long term, we need to be there. It's a real industry. Real industries have to grow up and act like real industries and their processes and everything else, because these are businesses. I think the green wave kind of had a little bit of that euphoria in there, where you had a lot of folks who might not have really known how to be an operator. And everyone always used to say, how can you lose money selling marijuana? And I think a lot of companies proved pretty easily. But just having strategies, having good management teams, good processes, these are all things that should have been happening from day one. So it's a good thing to see that coming down the pike.
Yeah, I couldn't agree more. I think there's so many people out there who effectively manage their business by their checkbook, how much money was in their account, and that was it. And then all of a sudden the tax bill came and they're like, oh, I didn't prepare for that big bill. And then the next thing you know, they're putting themselves up for sale. With that as a backdrop, maybe just as you guys might think, or as you said, Gary, more things to worry about. What do you think about the international market here today, as we see, different changing dynamics between the EU and obviously our great Canadian friends north of us here? A lot of people seem to think that Canada, once we do see federal legalization on the U.S. side, the Canadians will have an upper hand. I'm not sure I agree with that or disagree yet. I haven't had formed a good opinion, but would love to get your guys' perspective on the international market, whether it's Canada or the EU or South America.
That's interesting. I mean, Canada's had full legalization, so I don't know that the U.S. going fully legal, they'll suddenly have just an upper hand in and of itself. I think the MSOs here in the States have done a good job building themselves out to be ready for legalization and to defend their turf. Whereas before, maybe they had to partner up with a Canadian. They're starting to stand on their own two legs. They're scaling their businesses. I think Europe is probably 2 to 3 years behind where the U.S. is. But what's interesting is each subsequent ramp goes faster, right? So Canada was out in front, but it's taken them a while. Think about 2.0, just getting to the the vapes and getting to the edibles and how long that took. And obviously their marketing restrictions there on what the packaging looks like, I think helps slow that process down. So the U.S. has sort of caught up pretty quickly. They were behind, they're catching up, and there's still room to run. I think Europe is probably going to move even quicker. They're at least focused on the medicinal side. They like to look at the clinical aspects of it. I think you have many more jurisdictions you have to manage your way through. So I think trying to figure out how to develop distribution networks that are cost effective. I would expect to see a lot more partnerships come out of those sort of relationships there than companies trying to go and build their own sales organization or infrastructure. It's just an easier way to get in and out. So, I think those are two areas definitely. We sell a fair amount of vaporization hardware overseas. We sell into Israel. We sell into the EU. We do sell even, into South America and beyond. So we're seeing people really using them more on the medicinal side more than anything else. So certain of our products tend to go a little faster than others. So we haven't really thought much about the plant part of it just yet. We're staying more on the hardware and accessory side.
Yeah, to me, that makes a lot of sense because I think if you think about the picks and shovels side of the business, that should, with the innovations that are being driven in the United States and Canada, whether you're doing indoor or outdoor grow, those will have a significant impact and those will be good businesses. Folks are already playing in those spaces. If I think about the big competitors that probably have an edge, it's the consumer products companies, either in beverage or in food, that are already trying things in Canada or already are in places where they can or beginning to attempt it. So things that are skunk works that you're just not seeing even the tip of are happening around the world as people are thinking about what the next wave will be, whether it's going to be another cannabis infused seltzer that will take the place of the hard seltzers that are out there. And a lot of that innovation, and the other from an agricultural perspective is there are better places in the world along the equator to grow cannabis outdoors year round. You look at Ecuador, where cost per pound is 17 cents a pound, 20 cents a pound versus $400, $500 a pound growing indoors in the US. That may take some time to have those parts of the world supplying, just because of what's happened with the war on drugs over the past 40 years. But I see places like Ecuador potentially coming into play, Colombia definitely coming into play as sources of biomaterial and biomass. And it may be that's where oils get generated from. So on the cultivation side, I see a lot of the innovation happening, in thinking about how you take things outside. But the indoor grow, I think will, find its place around the world. But I think all those barriers that have been put up between countries on inter-country export are just going to continue to propagate. You see what's happening in Europe, where licenses to grow are showing up in Greece and Portugal and other countries where they have not legalized yet. And they're all saying they're going to serve the same customer base in Germany. And Germany won't order it. It'll be like Canada all over again. Germany can't use that much, even though from a medicinal standpoint, someone will figure out it's how to leverage its good properties. But I think the international marketplace will be, country by country, and there are going to be countries that will be slow to adopt because it requires a lot of fortitude for country legislations to say it's now legal, something that we've been fighting against for years. But I think there will be opportunity for us at Greenrose. There's plenty here in the United States to deal with, just with everything we've talked about in this session.
Great. Well, I know we're coming up on our last few minutes. Maybe I'll wrap it up with one last question or get your guys' over or under. Do you think we'll see 5 more states this next time around, or do you think we're going to be over 5 or under 5, I guess? Put the bogey out there.
I'd say it's probably between 5 and 10. I think the states that are going to come quickly, I hear Connecticut's going to be looking for legislation that'll come out shortly. I think part of the pressure in the Northeast is everyone that's gone rec. And if you haven't gone rec, you need to get there quickly. So I think there'll be between 5 and 10 states that'll push the recreational legalization. They just need to be.
I think that's right. I mean, you see that domino effect, right? You saw New York and New Jersey basically battling for who was going to get there first. And then boom, they go basically together. Pennsylvania sitting right around the corner. You have Ohio right there. So they're bordered by Michigan. So you're surrounded by all these rec states. You're watching those dollars go across the border. So it wouldn't surprise me. I think 5 to 10 is probably the right number.
Sounds great. Well, with that as a wrap, I want to thank you both, Gary and Paul. Really appreciate your time and your perspective. Thank you very much. And for everyone, Both of the companies will be available for one-on-ones. So please sign up or send me an email at Breza.lythampartners.com. Thank you.
Thanks, everyone.
Thank you. Thanks, everyone.